This week we're going to highlight crop condition ratings here for U.S. soybeans. We're going to take a look at short-term weather trends as we enter the month of June. We're going to come back and look at the latest export trends and wrap things up with a long-term review of November soybean futures. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We've moved into the month of June here, and of course the weather season has started. With that in mind, let's take a look at the latest crop condition ratings from the USDA. Now, the USDA released their initial crop ratings here for soybeans on Monday, June 1st. We're looking here at nationwide, 66% of the beans are rated good to excellent versus 67% last year. Now notice the color trend here. The states that are circled in yellow are unchanged from a year ago. The states that are circled in red are lower good to excellent ratings compared to a year ago at this time. And the states that are circled in green are above year ago levels. So we've kind of got a mixed bag across the area here. Northern Plains a little bit stronger than last year, part of the Western Belt lower, and part of the Central Belt there unchanged, the Northwest Corn Belt, Northern Corn Belt with Wisconsin, Minnesota unchanged. Let's now take a look at the history of the crop condition index. Notice here we're starting the 2026 with a blue dot here, slightly below where it was last year at this time, last year depicted by the red line. But here's the key message. Look at how the growing season proceeds. There's some years where that index stays stable. However, there are several years here where the index increases quite a bit to the upside or decreases quite a bit to the downside. Here's the key message. That suggests the potential for increased price volatility for the next 3 months. That's why it's critical you work closely with your trusted risk management advisor to continue to manage price movement and avoid price prediction. Let's shift gears now and focus on the weather. Let's take a look at the short-term trends. Our slides this week, as usual, are courtesy of T-Storm Weather. We're starting out here looking at precip totals over the last 2 weeks, kind of a proxy for topsoil moisture, if you will. Those areas on the map there that are green or yellow depict normal to slightly wet conditions. So those are good conditions as you enter the month of June. Notice there are some exceptions, however. Wisconsin is quite dry. Parts of northern Illinois, eastern half of Iowa, parts of northwest Indiana. So there'll be some areas, if you will, that we'll keep an eye on. Let's shift gears now and look at the next 7 to 10 days. There's a system setting up where we're going to keep temperatures very warm. That high pressure system, as you can see there. Key message, if this was the middle of July, there'd be a lot of concern for that system setting up. Obviously, we get further into the growing season, not so much so in early June. Let's look at rainfall now. Next 7 days. Rainfall, most of it is going to be concentrated in the west there in that green area, maybe up to 1 inch of rain. As you move further east, though, it looks like it's going to be a little bit drier across the heart of the Corn Belt, particularly the eastern Corn Belt. Let's look at precip totals now over the next 2 weeks. Next 2 weeks, most areas are going to be normal. The exception is a little bit wet there in parts of the northern plains. Let's shift gears now and focus on export trends. Now, year-to-date exports are 20% lower than last year. We've highlighted this throughout the spring. The market continues to watch China closely to see if they will buy old or new crop beans as part of the recent trade agreement. We'll keep you updated on that. Let's wrap things up this week looking at trends in November bean futures. Now, November beans, as we tape here on Tuesday, are trading about $11.80 a bushel. And notice now from June all the way into harvest there in October, the potential for increased price volatility, both to the upside and to the downside. Again, that's why it's critical that you continue to work closely with your trusted risk management advisor on your marketing strategies. Now, if you'd like more information, please feel free to contact us at 309-664-2300. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. Remember, we upload every Wednesday. Make sure to subscribe to our channel and never miss an update. Thanks a lot. Have a good week.